everyone. Welcome to the second part of the webinar, the environmental information disclosure by green bond issuers. I am very happy that we have actually 4 speakers, including 2 distinguished guest speakers. One is Ms. Tan Ai-Chin from OCBC Bank based in Malaysia, and the one Geng Crystal, Geng Yicheng from Ping An Group, and also 2 discussants. One is Shankini from CBI, and one is from Cisco from the FC. I have to say, technically, the 2 guest speakers are also from the financial institutions, which are very much like what we have in the first session. But in the session, actually, the 2 guest speakers are also green bond issuers themselves, or they are also helping corporates to issue green bonds. Without further ado, let me just introduce Ms. Tan Ai-Chin for her speech on the presentation. So Ai-Chin actually is sitting on the board of several companies within the OCBC group, and she has more than 30 years of experience in investment and the corporate banking activities. So without further ado, now let me invite Ms. Ai-Chin to give her presentation. So Ai-Chin, the floor is yours.
Yeah, good day to everyone. I'm indeed very have great pleasure to actually be part of this very distinguished panelists to talk about this very important, sustainability agenda for, the country as well as for the bank as well. So my presentation framework will talk about, firstly, OCBC's sustainable financing journey. Then we will go to talk about what are the standards that are applicable in Malaysia. And subsequently, I will just touch a bit in terms of, what is sustainability bond, and thereafter Malaysia's renewable energy journey, and I will just give a little bit of case studies on solar financing and another one on social impact bond before I go to end the presentation to talk about sustainability disclosure requirement. So on the first page, if you can see about OCBC's journey, I think as all my fellow speakers have actually alluded to, obviously it is very important as a financial institution to lead the way in terms of all this sustainable financing development to ensure that we are able to also convince our customers to do the same. So as investment banker, helping the customers to actually look at bond issuances, loan issuance, financing, we ourselves have to lead the way in terms of all this sustainability agenda. And OCBC is the first South Asia bank to actually prohibit new financing on coal-related power projects since 2019. And we have actually now have global outreach of sustainability financing footprint in all the networked businesses that we have. And at the same time, we have actually put a commitment to ensure that we will actually have sustainable financing commitment up to 10 billion in 2022, and we will actually double that by 2025. Yeah. So if you look at the green and financing standards, in a way, a brief of Malaysian snapshot. Certainly what we have done in Malaysia is that, with the lead by Securities Commission, who has actually co-chaired the Sustainable Finance Working Group, they have actually followed or mirrored what we have done actually under the Global Bank Standard as well. Global Bond Standards by ICMA. And so in the ASEAN standard, we have got all the standards that have been put in place, the green bond, social bond, as well as the sustainability bond. But on top of that, what Malaysia has done is actually to put up a sustainable and responsible Sukuk standard. As you may appreciate, I think Islamic financing is a core, financing instruments that is applicable in Malaysia in many parts of the world now. And so we have actually set up this standard, which is actually unique in Malaysia. And this standard actually is applicable to Sukuk. And the government actually gave tax incentive as well for issuers in terms of tax relief for issuances expenses, as well as grants to cover up to 90% of external reviewer expenses. So this in a way helped to also promote the agenda about sustainability bond. So if you talk about sustainability bond, what is it exactly it entails? It is actually combining the features of green bonds and social bonds into one product itself. I think OCBC is actually very glad to mention that we have actually pioneered the first transaction in this sustainability bond framework, and it is actually through a solar power project. So maybe a little bit about why solar. Actually, Malaysia has started also our renewable energy journey. We have actually put a target of 20% target in 2025. Unfortunately, at this stage, we are still quite low at 2%. Most ASEAN countries have also targeted between 20 to 30% mix within this period of time. So what Malaysia has done, we have actually speed up providing opportunities for market players to actually bid for all these what we call large-scale power projects in Malaysia. And the recent power bid that we have actually put up, we received actually 700 bids, and of which most of it are actually, of course, local players plus many, international players as well. And we have actually selected 5 bidders from there. So you may ask, why actually solar in Malaysia? Obviously, being located at the equator, we receive considerable amount of sunlight and with good irradiation, and that help us to actually, provide, opportunities for solar power plant, especially when we do have also sufficient land bank to actually provide for this, because land banks for power plant is actually quite huge. You need about, let's say, about 200 acres to cover for about 50 megawatts kind of power plant. So this is actually our success story. We actually helped this company called Edra Solar. This is actually a subsidiary of China General Nuclear Power Corporation, which is obviously a very large, Chinese state-owned enterprise, which actually focuses on renewable energy all over the world. And Edra is actually the first company or the first investment that I've actually made in Malaysia. And we were very glad to be given the opportunity to actually help them to arrange this bond transaction involving their first solar plant in Malaysia. As you may appreciate, I think CGN has also issued many green bonds as well as green loans in the past, for which OCBC is also one of the arrangers as well. So this solar bond is actually the first ASEAN Sustainability SRI Sukuk in Malaysia, which has actually won an award from a few international publications. So the reason why actually Edra Solar is unique in terms of the bond structure is because it is able to combine the green and the social criteria in order to be labeled as such. As part of, besides just developing the power plant, as part of CGN's CSR program, they have actually allocated a major portion of their land bank to the local community, which are all local farmers, to actually develop agricultural opportunities by planting firstly pineapple, and after that other crops as well. So this initiative is actually done on the basis that it is without benefit to CGN. So essentially the land is actually given for free, and it will be managed by the government agency jointly with the local farmers to develop all these kind of crops. And all the benefits will then be accruing to the local farmers to support them. So this is, in our view, a very good initiative by first-time investor into Malaysia to support, the local farmers in their, livelihood. So next, I will talk about, sustainability-linked financing, which I will then talk about a case study as well. If you talk about sustainability-linked financing, as you can see, the bank and the clients are to set its own sustainability benchmark. And so this is actually different from the usual, sustainability bonds. And when you achieve a certain, what we call SPT, Sustainability, Performance Index, then you will actually be rewarded with reduced pricing or even reduction in principal. So unlike green bond, all these price saving are market driven and will definitely not change over time. So the case study I want to talk about is the next page, please. So this bond issuance is actually sponsored or initiated by Khazanah National Berhad. Khazanah is actually a Malaysian sovereign wealth fund. And so as part of their CSR, they have entered into a public-private partnership with the government to actually set up trust schools. And this trust school is with the objective of actually setting up many schools in the whole part of Malaysia, and and they will be providing funding for them. So in this quest to actually raise funding, they have also asked the support from the investor base as well to support this initiative. And this is where the Sukuk program came about. So this is the first social impact bond in Malaysia. And basically the structure is on the basis of pay for success basis. So essentially, the investors will only be paid if they are successful in meeting the KPIs that has actually been set from the beginning. And the KPIs actually involves looking at the teachers, the students, the senior leaders in terms of how they performed in the schools. And if they do meet the criteria that is set, then the investor will be paid. But at the same time, the investors are also given the option to waive all the rights and benefits to interest and principal, which means to say that you can actually take it as a full, CSR investments, and you're not going to be getting any returns out of it. So OCBC, as part of our CSR initiative, has actually subscribed to these bonds, which they have raised 2 years in 2015 and also in 2017. So I think, in a way, as a financial institution, supporting issuers or actually promoting for issuers to come up, to the market to look at, sustainability bonds and all that. I think it is important that we also will assist them in looking at what are the best ways to actually do disclosures as well. As you may appreciate, I think listed companies typically will not have a problem. They will, in some cases, they would even have their own sustainability framework as well. But not all companies would have that, right? So for private companies, that's where the issue is. So that's where we actually help them to look at, what kind of framework that they should actually come up with, with the support from, some experts, on all the sustainability issues as well. And with that kind of sustainability framework, then we can actually help to look at what kind of financing requirements will be able to be benchmarked against this sustainability framework. And with that also, we want to also continue to incentivize them, right? Incentivize them by giving them maybe discount in terms of the interest if they do meet all these sustainability criteria that they have set upon themselves. So the sustainability disclosure requirements for bonds and sukuks and all that will happen, prior to the launch, and at the deal launch, and even after the deal launch as well. Yes, I think that's all for my presentation.
Thank you very much, Ai-Chin. I think you mentioned a very important and interesting point in the last of your slide, is the incentivize and also the discount or loans in terms of interest, or the loans in sustainability. That's very interesting. I think some audience might have some questions following this. Let's move on to our first discussant, Sean Kinney, who is the CEO of the Climate Bonds Initiative, and also he is serving on the technical expert group on the EU taxonomy.
It's a privilege to be part of such a fantastic group of people, all working to create a better world in green finance. So thank you everyone for comments today, conversations today, and of course being part of this group. This is going to be a challenge for us in the coming year. We know we're dealing with a crisis. It's a crisis, we can argue, of resilience. Our systems are going to need to be able to deal with these sort of crises going forward. It's going to be a common feature of climate change, substantial shocks on a regular basis of one from another. So we've got to learn from it, and we also need to make sure that the future, the stimulus out of this, is green, come what may. This is our opportunity now to rethink how the world works going forward. The whole issue about disclosure and reporting and transparency is part of a governance framework that ensures we stay on the right track for building a future for our children, and that's why this is so important. I want to make a couple of quick remarks about what's happening globally, to pick up a couple of comments and finish up with, I want to start off with some news. Today, Iberdrola closed the bond, a benchmark size bond in Europe that was 11.5 times oversubscribed. I think that's the highest level of oversubscription I've ever seen for a green bond. We may be in the middle of a very, very tough market, but I'll tell you what, green is cracking. So bear that in mind. And others might comment on that. That's just a marker for the day. We've got a few highlights I wanted to draw. We did a report last year on disclosures, and we'll be doing a newer one later this year, we hope, subject to support from some of our partners like Ping An and Amundi, which found a few things. It found that China has the highest amount of use of proceeds disclosure. That's quite interesting. In other words, more dollars issued in China have good use of proceeds than anywhere else. Now, that's thanks to the regulatory regime that's been in place in China, clearly driving this. We've seen that the highest proportion of companies or issuers in the green bond markets that have got good disclosure are non-financial corporates. Now, of course, we have the odd fantastic bank like in Malaysia who's doing good work, but overall, good practice amongst corporates is leading the way. We've seen that in terms of sectors, transport and forestry, but transport being the big one, has about a 95% record of good use of proceeds disclosure, which is fantastic. The other sector's laying a bit behind. We have, however, seen that there's about 200 different sorts of metrics used to provide impact reporting or reporting on disclosure, which is challenging for an investor because of the wide variety. If I can take you to the next slide, please. We've also seen a fair amount of regional variation, but the good news is that the largest markets tend to have high levels of reporting. That is, as a market grows and it becomes a feature of the country, the level of percentage of reporting actually rises and best practice becomes the norm. We've clearly seen this in China and, of course, across European countries, France, Germany, and the highest results are actually in Sweden and Spain. Japan, a latecomer to this market, is doing quite well on this as well. So we think this is going to improve. We've seen a significant improvement in reporting over the years. We have a change that's been happening over the last couple of years. We've gone from an ad hoc approach to the use of reporting around the world, lots of different metrics, lots of different approaches and so on, to much more formality and consistency. China, again, was the first jurisdiction to move on this, thanks to its regulatory measures. Of course, there are still challenges in China harmonising between the different regulatory settings. There's work to be done. But we've also seen the Green Bond Principles drive this, the Climate Bond Standard that you're aware of, and more recently, the proposal in the European Commission for a Green Bond Standard that drives this. So now we have a pretty common approach emerging around pre- and post-issuance reporting, which was not a feature of the early part of this market, and impact reporting, guidelines around reporting. The Nordics first bringing together some guidance this area, and now the Green Bond Principles and others working on this. So these are important developments. Now, what we're looking at really is also an approach to harmonise globally. We have an in-principle agreement between the European Union and China to work on harmonisation of taxonomy and also to look at harmonisation of green bond standards. I mean, that will take a while to do, but it's a fantastic step that we have that appetite. In fact, there's a new intergovernmental grouping called the International Panel on Sustainable Finance, which the European Union convened, and China is a key member of, along with India and a number of other countries, and we're hoping, by the way, Malaysia will join soon, that is looking at how to work on intergovernmental level on harmonisation and complementary approaches in different countries. So there's a framework, if you like, to take this forward going forward. That will become very important for rules and common approaches to use of reporting around this. To grow this market to the scale it needs to be, which is a market of many trillions of US dollars going forward, so it meets the need for the kind of investments we really need to shift our economies to become sustainable and green. We need to commoditize and make consistent our metrics, our reporting frameworks and so on, to make it easier for people to jump in, avoid confusion. So this is a critical part of the task going forward. In Europe, there are a number of key developments. Of course, the implementation of the Task Force of Climate Finance Disclosure Recommendations is an important part of the European regulatory environment. It will now become mandatory for investors, corporations and banks, as well as green bond issuers, to disclose their sustainable investments, in the case of investors and corporations, banks, as well as their climate at-risk investments, and they'll need to use the common framework of the EU taxonomy to do that. In other words, we're embedding, as of the end of this year, an approach to ensure there's a common standard across all of these sectors for what we call green and what we call sustainable. That's a very important part of making it easier for this market to grow and common guide rails for everyone. That will have a slow phase in. We're leaving time for data provision to become available, which will require a couple of reporting cycles, we think, before that becomes a mandatory regulation for the segment. And Frederick Samama, of course, is in the middle of figuring out how this works. That has been a great supporter of this project at Amundi. The Green Bond Standard, which is Europe's approach to do what, attempt to do what China's already done with regulatory guidance, is coming into play later this year, and will do things like make mandatory independent review and reporting requirements. In other words, we should be able to reduce the ad hocery that we've seen and ensure that everyone follows a common set of principles and rules going forward in the European market. And that will, of course, have a flow-on effect to people raising funds in the European market, or because the taxonomy aspect covers all investor reporting in Europe, it'll also have a flow-on effect in that area to equities and other kinds of investment. So this is a step up in terms of conceptual frameworks for how we achieve common standards. It's quite clear that the transparency and reporting aspects are absolutely vital, as some of our other speakers have said, to ensuring confidence in the market and also to pushing change internally. There's many collateral benefits of doing this sort of approach. This process we're in right in the middle of now is how to turn this into standardised approaches. We, of course, also have the international standards organisations. I think we've got 3 separate working groups on different aspects of green finance, one on green bonds, who are attempting to codify these, and we have many participants from around the world in those groups, to pick up these themes, not to create new ideas, but to codify the work that's already been done in different jurisdictions so we can make this a global norm. And that should have a flow-on effect to issuers, to investors, and make it work. I know Ping An has been very committed to this process and has been doing its own bit to create green bond funds that are consistent with global norms. And I know that ICHIN has worked on how to marry the global approaches with the Malaysian approaches. And it's very important to note that Bank Negara and the Malaysian Securities Commissions have been regional leaders in green finance and in sustainability proposals, and including incentives, by the way. So we've got some really interesting energy around the world. It's going to be an exciting year because I think not only will we further advance the standardisation process quite quickly now, given we've got so many people looking at this, and there's many other countries that are looking at these issues as well, but also we're going to have an incredible stimulus to try and recover our economies. And the conversation, certainly in Europe, and I know in China, is about how to ensure that stimulus is green. And that'll be about green finance as well to make that work. So we'll see a lot more application of energy by our authorities, our governments and our regulatory authorities, and all of those of us who know this has got to be an important part of the future, to advancing it rapidly, really rapidly. So that Iberdrola story, 11.5 times oversubscribed, I'm sure will just be a harbinger of things to come. I'm looking forward to a green being the fastest recovery slice. I'll stop there.
Thank you. Thank you. Thank you very much, Sean, for your interesting comments and also points. I think you made a very good information to us that actually the latest issues of green bonds has been oversubscribed by 11 times, which actually will mean that during this difficult times like this time, actually people will realize that sustainable development is so important. This is a battle we cannot lose, and you have to invest the money in the right place. Let me just introduce our speaker, who is Geng Yicheng from Ping An Bank. Crystal, the floor is yours.
Hello, everyone. Now this is Crystal Geng from Ping An. I think Ping An is the only representative of the corporate whose headquarters is in emerging market. So it's a great honor to meet all of you online, and thanks for the host and the co-host organized this webinar. Compared to HSBC, FC, or other peers who are the leading players, I think, in this industry with a long history, Ping An is actually started on our ESG-driven sustainable transformation since 2018. That is less than 2 years ago, but we have achieved a not bad result. So as an active player in emerging market, I hope today my share could inspire most of the corporates, especially in emerging market, who are still hesitating or confusing on whether they should do ESG or not, or if they have the willingness and how to do it. So I hope I can give some highlights on those questions. On this page, you can see is our business in Ping An. As you know, we are a comprehensive financial group covering insurance, banking, and also asset management. So on one hand, we are an insurance company. So we insure risks. So ESG risk is heavily associated with our core business, which means the ESG risk integration is a surviving topic for us. On the other hand, we are an institutional investor. By end of last year, our total investment is around 3,000 billion RMB. So to invest this in a sustainable way is very crucial to Ping An. So we believe we could act as an active influencer on the environment and also the society through our insurance and also investment business. First of all, I would like to share our sustainability core issues, which I believe is the fundamental points for any kind of disclosure and also the information management. You should know very clear who are you and where you could work on regarding sustainability. Then you can do the disclosure and management and so on. You could see in Ping An, our issues are in 3 aspects. The first one is about the corporate governance. The second aspect is regarding to our sustainable business integration. And then the third part is about our responsibility to the community and the environment. We have established 500 ESG indicators under those core issues. And also we established a very sound and comprehensive management system. I mean, all the policies and the management procedure, you can find it on our website. Besides, we have created an AI ESG platform. Since last year, this platform can give us a very useful tool to manage our ESG information across our more than 40 subsidiaries. So that is all the efforts we have done on ESG disclosure and also management. This slide is actually our double positions on ESG. So first one is we are the listed company. Now we are A and H listed. So we are facing some encouragement and also pressure actually from the capital market, especially from the institutional investor from developed market. So this is a motivation for us as well. And I suggest other corporates, especially in emerging markets, could start with this to push the ESG work within your organization. I have listed the ratings and indices here to show our improvement. And the reason is those assessment framework is a great reference for us to build our pool of ESG indicators for disclosure. So it's a very good reference and starting point if you want to do a good job on ESG disclosure. Secondly, as for an investor, we joined a few influential organizations. As you can see here, we are the first Chinese asset owner who signed PR, and also we just signed GIP as well, and also CBI as well. They all provide us with very good practice and good advice. And also it provides us very important occasions for exchange opinions like this webinar we have now. This is some latest result of our ESG performance in last year. I list out some figures. These figures are under 5 rules of Ping An. So I am not going to talk more on the actual figures. You can find it in our website, in our sustainability report. Is the one Sean just mentioned. Last November, our asset management arm in Hong Kong issued a China Green Bond Fund. The fund is based on CBI green standards to build and manage our portfolio. And the fund is targeting professional investors. So the green bond insurance in China and the emerging market actually accounts for 26% of the global green insurance in 2018 and has maintained a good growth rate over the past 3 years as well. So I show you some actual figures for this model portfolio. You can see our average credit rating is as high as A-. For the countries, we are focusing in China emerging market green bonds offering. And if we look at by the sector, it is all well recognized by CBI green standards to ensure the ongoing green requirements could be compliant. Okay, next slide, please. Then I'm going to talk about the other thing, which is the TCFD report we released last year. It is our first try to give this kind of TCFD disclosure. And as far as I know, this report is the first TCFD reporting in China, we strictly follow the suggestion given by TCFD, which is the governance, strategy, risk management, and also metrics and targets. From my point of view, I think the government is very crucial because you have to establish a very effective and systematic management system, and then you can do all the other things. I mean, to make a strategy, your policies, and to how to incorporate the risk management in your business. I think I'm going to give you a very quick go through of our report in the next few slides. This is the governance part just now I mentioned. So you can see we have 4 levels of our climate change governance structure. The most top one is, of course, the board of directors. And then you can see we have incorporated the risk management executive committee, investor relations and ESG committee, and also the investment management committee inside to review and approve all our related targets and strategies. And then followed by level 3, who is our group ESG office, and also level 4, which are our subsidiaries. This is our responsible investment policy. I'm not going to give more details on this slide. Actually, I'm not going to give some details on this sharing session. If you are interested, you can read the following, I think, 4 to 5 slides, which is talking about TCFD reporting. And also you can download this report if you are interested in our website as well. I think that is all of my sharing because the time is very limited, so I want to give the time for Q&A maybe. Thank you.
Much, Crystal, for your interesting introduction and also some highlights on the Ping An Group's performance and also on disclosure, especially by following the TCFD's recommendations. So now let me just invite Francisco Avendano from the IFC, who is the Climate Operations Officer in Climate Business Department. He's leading the implementation of green finance instruments and also global focal point for the climate metrics at IFC, covering green bonds, green loans, climate loans, guarantees, etc. And Francisco, the floor is yours.
Great. Well, thank you for the opportunity to be a final discussion on this webinar. A lot has been said today regarding disclosure. And disclosure is happening. We see that emerging markets, green bonds are growing. And as that growth happens, we're also having a lot of disclosure. And CBI already mentioned that the most of the disclosure is happening in those more mature markets. But the question is that how is this disclosure taking place? Is this being comparable? Is this being ready for use by different groups of market participants? Not necessarily. If we look at what is happening in different stock exchanges, for example, in the Luxembourg Stock Exchange that holds close to 50% of the global green bonds, so they have, as many other capital market infrastructure agents, they have the duty of organizing information that they receive and make it available to the market. But if the information is not necessarily under the same units or is comparable or is ready for analytics, then it is very difficult for market transparency to go to the next step. One thing is to provide the disclosure, and another thing is to have the disclosure really ready for being applied for decision making. In the case of the Amundi fund, for example, the Amundi asset management fund that have together between IFC, Amundi, and others, that fund is exposed to multiple geographies and multiple markets, but each geography may have their own approach to, let's say, how to do the reporting, how to do the disclosure. Even in some cases, we have specific taxonomies for particular markets. So how do we make sense out of that data? Right now, if we look at the market ecosystem, we have investors, external reviewers, ESG data providers, and market infrastructure entities such as stock exchanges. And we have also the need to increase transparency and credibility to the market. So how do we do that? External reviewers have a particular contribution to make, and they provide the assurance that is needed to make sure that we are not greenwashing. But that activity needs to be at least comparable. I have seen external review reports that are one page with a couple of sentences saying, yes, this is green. And I have seen others that are very long, but not necessarily providing a lot of actionable information for investors. So I think there is still a gap in the market to be able to aggregate information, to make information comparable. And this is right now very critical in light of some developments, such as the EU taxonomy. As you may know, much of the international green bond investors come from Europe. So in a way, they will have to observe the EU taxonomy in their process on how they invest potentially in emerging markets. Not necessarily they have to follow that to a letter, that's still to be analyzed, but it will have an impact anyway. So in order to make the domestic approaches in different countries and different markets not necessarily the same, but at least consistent with the EU taxonomy and with other important standards, there is a need in the market for a protocol to translate apples to oranges, oranges to strawberries, and all that to make sure that we are aggregating and using the same type of information. IFC is working on that. IFC is working on the development of a green finance review protocol. So we are looking at not only an asset level type of taxonomy, but also trying to link what is the impact of those, let's say, green bond private sector activity on the ground to the overarching country's targets. No? Because if a country such as Colombia or even, let's say, Malaysia sees that there is a lot of activity on their green bond issuers, they have the question, so what does it mean for our climate targets? What does it mean for our so that's not an easy answer. Why? Because the labels are not necessarily the same. Countries at the national level, they use systems to track national expenditures and investments on climate-related actions. And on the other hand, you have at the ground level, you have banks and corporates that use asset level taxonomies and labels. So I think there has to be a protocol in between to be able to compare apples to apples and also to link different markets. This is what in IFC we call the Green Finance Review Protocol that is being developed. Very soon will be socialized through different initiatives, including the Sustainability Banking Network. And this comes as a response as well to providing extra granularity and more specifics to what is green on the market. No? If we look at the green bond principles and if we look at the available taxonomies, they cover a lot of climate-related action. They also cover a little bit of the extra green, not necessarily climate, but they are not very granular in some areas that are considered urgent at the moment. For example, blue bonds. You know, there has been precedent on blue bonds from the Seychelles Islands. Basically, blue bonds are a type of green bond that is very specific for ocean protection and water resources. So, but if we look at the green bond principles and the list of indicative activities, or if we look at available taxonomies, not necessarily they provide a lot of granularity on what could be considered an eligible use of proceeds for a blue bond. If we look at what we have right now on the public domain, we have some general top-down reports like the foundation report on the blue economy and what needs to get done to scale up the blue economy, but we don't have specifics. So we have questions from our clients in terms of what could be an eligible use of proceeds for a blue bond. No? Then we can do our research. We have, as IFC, provided an orientation note to our clients, to some financial institution clients, to say, okay, for example, there is already an ongoing certification system for the fishing industry, and they have standards, they have a benchmarking mechanism like the Marine Stewardship Council certification for the fishing industry. So if you have investments that have this certification, or you have some fishing products that are with a very high score or blue label on this certification, then that could be a potential use of proceeds for a blue bond. That's the type of specifics and granularity that the market is demanding. Specifically in East Asia Pacific, we are seeing demand on this. There is a need to not only to say where are we spending the resources or the proceeds from the bonds, but also there is a demand for specifying what is the impact of those use of proceeds. We see that there is a lot of disclosure on impact, but not necessarily on impact indicators. No, many times we see annual impact reports that are detailing the pie chart regarding different use of proceeds by project categories, but not necessarily specifying the impact per category. And this is very important in order to have a proper documentation of the actual use of proceeds. This is my 2 cents for this webinar. I'm happy to answer questions.
Thank you very much, Francisco. I think your points are very good. And conscious of time, I think I probably will need to summarize a little bit and then give you one question for each of you and 1 minute to answer. So I think it is not even a question for the green bond issuers or financial institutions to disclose or not, but it's more like what to disclose and how to disclose. And our guest speakers give us some answers. For example, OCBC said actually they would provide some incentives for the green bond issuers that they are arranging. And for the Ping An Group, actually they are themselves are doing the pilot project, including the China-UK pilot project, and also they are a member of the GIP, Green Investment Principles, by which they're also encouraged to do a lot of disclosure, for example, by following recommendations of the TCFD. And for the Sean Kinney, the CBI and the green bond issuers, I think it is even more closer and clearer that actually green bond issuers need to disclose to their investors as to what information they could have and also how much environmental benefits these green bonds are creating. And since Francisco, you're also already talking about the green and the blue bonds, maybe the first question will come to you. So I'm picking up one question from the Slido, and people are interested in this topic. So blue bonds are actually a relatively new type of sustainability bonds that finances projects related to ocean conservation. Can you tell me what is the difference between green bonds and blue bonds, and what will the World Bank do in the future? You have 1 minute to answer, maybe very short. Please, the floor is yours.
Thank you for the question. Well, actually, a blue bond is a very specific type of green bond. The green bond principles is basically a transparency framework to organize and communicate information on the bond. No? So when we talk about blue bonds, we need to be more specific because so far, as I said, we need to be precise about the use of proceeds that have a concrete impact on ocean protection. That is not very explicit. If we look at what we have on the indicative list in the green bond principles, that is not necessarily present in the available taxonomies. So that's why, in light of this market gap, IFC initially for its clients is coming up with some orientation documents to guide the process of structuring blue bonds, taking into account very concrete use of proceeds and that help on ocean protection, and organize this information taking into account the green bond principles. We don't need to necessarily reinvent the wheel or to say we have to have blue bond principles separate for the green bond principles, but we need to be specific on use of proceeds for blue bonds. So we have to follow the same logic behind the green bond principles, but to be more specific in terms of granular use of proceeds that help ocean protection. That's the main difference.
Thank you very much, Francisco. Now, my second question goes to Ai-Chin from the OCBC Bank. So what are the key challenges for green bond issuers in meeting and disclosing environmental requirements to be listed as green?
I think for the listed companies, it will not be a problem because typically they will be required to do all this disclosure by their own stock exchanges and all that, and they may already have their sustainability framework. But I think the issue is really for those private or smaller companies where they may be reluctant to actually do this disclosure. Mainly also, maybe one point is because they don't want to lose their comparative edge, or maybe the other point is also they don't actually have the adequate governance structure. So I think in this respect, maybe the solution for us to help them is to facilitate the appointment of advisors who can actually help them to establish all this kind of sustainability framework and to assist them in terms of the reporting requirement. But of course, the challenges to that would be then there will be an increased cost to these kind of issuers and all that. And that's where I think we talk about maybe one point to consider for the banks is actually to look at giving them some incentive back, or if they are able to actually demonstrate that they are able to actually meet all these sustainability criteria. At the same time, I think to also look at whether are they able to successfully do some impact reporting as well. I think one of the questions in Slido talk about how do they disclose impact reporting instead of allocation of use of proceeds. So maybe that's the part that we can actually incentivize them on as well.
Thank you very much. I think that's very clear. Okay, my next question goes to Crystal. I know actually you're already disclosing your company's financial and environmental performance by following TCFD recommendations, but actually what kind of recommendation would you have for disclosure metrics to be used by companies, for example, your clients or any other financial institutions as well?
Okay. Regarding what kind of disclosure metrics we should use, actually in Ping An, just now I mentioned we develop an AI ESG platform which can manage our ESG information across our 40 subsidiaries. This platform consists of, this system consists of 4 categories. The category which is environment, social, governance, and business, it covering around 500 indices. This system actually we develop with a combination of a lot of reference and guidelines, such as the Hong Kong Stock Exchange and also Shanghai Stock Exchange. We also take reference and also we add some Chinese style indicators on this system. So you can develop your own disclosure metrics based on a lot of the reference which is available on the market, because on one hand you have to be compliant with the listed stocks, as a listed company, and also you want to have the higher capital market valuation. So that is why you have to take consideration of the rating agencies such as MSCI. So that is my suggestion.
Great, thank you very much, Crystal. Now my last question will go to Sean Kinney. I'm choosing the question from the Slido, the number 3. Since each country has its own regulation, if there is a better one between mandatory and voluntary environmental disclosure. So let me just blend it. Someone also think it's a challenge, like independent review and reporting requirements. So what is your suggestion to overcome such a consideration and also a barrier?
We've got global capital markets, we know that. Yes, it would be easier if we had a common global framework. In the meantime, you look at where you're raising funding and you have to meet the regulation or the best practices to that particular market. I think we're used to doing that. If you want to raise money in China, you will need to meet one of the Chinese set of regulations, depending on which market you're issuing into. Ditto in Europe, ditto in Colombia, because there's a taxonomy being worked on in Colombia. In fact, we're collaborating with our friends at IFC and Francisco on supporting the government there, and so on. So, I think the simple answer is you have to work in what's the best practice in that particular market. But it's important to note that the framework for regulation and guidance and rules everywhere is actually the same. So if you look at the green bond principles, you will understand the basic principles in pretty well every market. There will be nuances, especially where there's a strong regulation, as in China and soon to be in Europe. You'd have to look at the specific regulation. There is work to harmonise. That will become easier over time. But if you're going to raise money, if you're an Indian issuer and you want to raise money in the Singapore, Hong Kong and Paris market, you will be having a look at those regulations and doing disclosure in line with the guidelines and regulations of this market, knowing they're not particularly different. It's not necessarily going to be hard, but you'll have to have the boxes ticked. And that's why you have an independent verifier. That's their expertise. They can make it easy for you. This is not a big barrier. That's the main thing I would suggest to you. And of course, where there aren't guidelines available locally, and many regulators do, and in fact, Cheng Lin and Ma Jun have been party to many discussions over the years of regulators helping to develop their own guidelines, then you can use the international default mechanisms, which is green bond principles or climate bond standard, social bond principles, and so on. And they work pretty well everywhere. So I don't think it's that hard an issue, but I do appreciate that people are looking for more guidance on things like impact reporting. That's why Chin's comments were so useful. And I think you're going to see more of that coming out. It's certainly a feature of what's happening in Europe in the green bond principles. So this will develop. We've got to be careful not to make it harder. We've got to commoditize, standardize, and simplify while ensuring the appropriate levels of transparency and reporting are there to ensure confidence. It's that tension we're working on. It's something that you will see more developments on in the coming year. I hope that answers your question.
Yes, that's a very good question. A very good answer to my question and also the question from the audience. So once again, thank you very much to all my guest speakers and discussants. And now I conclude my second session, which is also second part webinar. So now I'd like to hand over back to Rosani for maybe further announcements and wrapping up. Rosani, the floor is yours.
Okay, thank you very much. I'd like to say thank you to all our distinguished speakers and moderators. We are reaching the end of our webinar today. Chenlin, do you have any more further comments before?
Yes, let me just welcome Dr. Ma Jing to wrap up speech. Dr. Ma, the floor is yours.
Thank you, Chenlin and Rosani. I'd like to say a few words on three topics. One is what are the drivers for disclosure? That's actually a question I think raised by many people in the audience, but we haven't had a chance to really discuss in depth. I would say number one driver is regulator. This is something that Sean Kinney has briefly mentioned. Just give you experience of China. Our banking regulator back 7 years ago began to ask the banks to report their green loan balance. That was the initial effort, but later on it became more extensive requirements. And 4 years ago, when we put out the green bond regulations, we asked the green bond issuers to disclose the use of proceeds and environmental benefits. So these are all requirements from regulator, which definitely had a huge impact on the issuers and on the banks. And more recently, the discussion is now going on between different regulators in China, including Environmental Ministry and other financial regulators. They are planning to publish a requirement for mandatory disclosure of environmental information by all listed companies and all bond issuers. And I'm expecting that new regulation to come out this year. If this is materializing, I think it's going to be significant impact on all major players in the market. And globally, there are many efforts in the same direction. For example, EU is now considering some mandatory requirement for disclosure. And I think UK and France have put out some requirements already in the years for institutions to report climate-related information according to TCFD. The second driver, I think, is investors and financial institutions themselves. Many investors, they want information, as I said earlier, to distinguish green versus brown assets so that they can allocate the assets or capitals to the right place. And also some of the FIs, they want information to manage their risks, especially risk arising from environmental information exposures. And the third driver is a combination of many players, for example, verifiers, NGOs, research institutions, MDBs, and so on and so forth. They provide capacity to many of the issuers and the borrowers to help enhancing their ability or capacity to disclose information, calculate the number they want. And the fourth player or fourth driver is what I call industrial associations. Just give you an example, the China Green Finance Committee as an industrial association in the space of green finance, together with City of London, back 2 years ago, launched the pilot program between China and UK on environmental information disclosure. And now we have 13 major Chinese and UK financial firms joined this program, and they volunteer in disclosing more information than the other players in the market, leading the way of essentially creating standards and templates for better disclosure. Ping An is one of the members of the task force. The second question I'd like to touch upon is, again, what Sean Kinney said, harmonization of different standards in different jurisdictions. The largest two green finance markets, China and Europe, are now in talk. very likely under the IPFS, which is the International Platform for IPSF, Sustainable Finance, there will be a working group between China and Europe working towards harmonizing the Chinese green finance standards and the European sustainable finance taxonomy. My own vision is that this working group will work out what I call the common ground for the two sets of standards. And that common ground essentially is an overlapping portion of what China considers green and what Europe considers green. And this will be the higher standard than the Chinese and then the European standards. And that common ground can be used by, for example, Chinese issuers to issue green bonds in Europe and European issuers to issue green bonds in China, therefore facilitating low-cost transactions for cross-border green capital flows. But there are many other benefits of this harmonization exercise, including setting the benchmark for some international dialogue on consistent or harmonized standards for the global green finance market. The third topic I'd like to touch upon is a little bit digression from the topic of disclosure, but definitely I think in the heart of green finance during this particular moment, which is the pandemic of COVID-19. The issue is many countries are now putting out stimulus programs. And I think many of these countries want to invest significantly in infrastructure, in some of social projects like schools and hospitals and many other areas. Now, the issue is how do we make sure this new round of stimulus program, which is probably larger than any others in history, is green? And we are hoping that more people, including all the participants for this webinar, can participate in this discussion. My personal view is that we want to do three things to make sure the new stimulus program in many countries are green or greener, at least, than before. Number one, we include more green projects into the stimulus program. Funding is directed to greener allocation. And secondly, we want to make sure all projects, whether they are classified as green or sustainable or not, they need to meet environmental and social standards. Therefore, every single project in the stimulus program do not harm the environment and do not generate too much carbon emissions. The third point is that incentives the government is now thinking about giving to various kind of sectors need to be focused or more targeted to support green, rather than giving out to corporates and sectors and segments of population with no respect for greenness or sustainability. So I'm really hoping that the audience today, which Chengling told me has reached 1,500 people, much more than I thought earlier, the 600 number, can participate in this dialogue and voice your support for the green stimulus to your regulators and your policymakers in your country. So with that, let me conclude by saying thank you all very much for attending this webinar, which is one of the events under the Green Finance Leadership Program, co-hosted by Tsinghua University, by IFC and World Bank in Malaysia. This is one of the new forms of our communication and dissemination of green finance knowledge. But I think in the many months to come, we probably have to stick to this form of webinar in order to reach out to a larger audience with low cost and with minimized carbon emission. So really thank all, including the organizers, the audience, the speakers, and also the supporters for the Green Finance Leadership Program, including UK-based Hewlett Foundation and Grover Foundation. And I'm looking forward to further dialogue and discussion with all of you in the near future. Thank you.
Thank you very much, Dr. Ma. I think our colleague told me like a moment ago, the latest number of observers is more than 3,000, more than 2,000. It's 2,350. So plus YouTube, I think it's more than, it's close to 2,500, which is a great plus and a very important encouragement for us. So maybe just a little bit of advertisement. This is the first series of the GFRP webinar, but actually we will definitely carry on. And please keep an eye on our website. It's gfrp.org.cn. Future events will be announced here. And if you have any other questions related to the topic in green finance or the topics we discussed today, please feel free to send email to us so that we will compile that into some of the frequently asked questions. With that, I would like to announce the closing of today's webinar, and thank you very much for watching. Goodbye.